Welcome back. After yesterday's mayhem at Dalal Street, the Indian markets continue to be volatile and have extended the losses. In fact, after rebounding marginally, the Sensex not only pared gains but is also in the red yet again. Sensex in fact surged more than 300 points and Nifty claimed 7,900 mark in early trade. However, there was a rapid swing with Sensex falling more than 400 points. Asian markets have also been a mixed bag this morning. The Shanghai Composite in China have extended its fall with more than 6% fall today as well. And after nearly 3.5% fall in early trade, the Tokyo market recovered yesterday. Now, India's benchmark index, Sensex, plunged by 1,600 points and the rupee crashed to a two-year low as worried about the China's economy deepened. Investors, in fact, lost around 7 lakh crore rupees due to the market meltdown. Okay, so the markets there, Monday mayhem was witnessed yesterday. In fact, we saw Arun Jaitley and the RBI Governor, Raghuram Ranjan, who did come out and said that India was still in a good position and there was nothing to panic and such correction is expected. But markets, in fact, there was a slight improvement today in the morning when it began, but now they are trading in the red. We will be getting more expert advice. Sunil Pachisia, who's the Vice President of Pratibhuti Viyog Private Limited, joins us now. Mr. Pachisia, thank you so much, first of all, for joining us on India Today. Your current thoughts on the volatility that is being experienced at the markets this time?
See, due to the carnage that has taken place last week and the carnage which has continued yesterday, the dust to be settled down, it will take some time, and in that process the volatility is going to increase because a lot of over leveraged positions which are there of maybe it is the investors as well as the speculators. Those positions are likely to be squared off, and probably then only the clearer picture will come which side the markets are going to take a direction.
But what about the European and the US markets?
European, I think, as I said, like a lot of carnage has already taken place, but now is the time for the stabilization. So it might take another day or two for the stabilization, and once it stabilizes, the markets will again try to find its zone on the direction which side it has to move. And it is always better for this type of volatility to cut down, because in this volatility nobody is able to take a call whether to go long or whether to go short on this market. Due to which the investors are losing money, the fund houses are not able to take a call on the directions of the market, and it is only the bigger players who are having the funds, they are able to take the positions and make the money out over there.
All right. We did hear, policy makers. Yes, sir. Please go on.
Yeah, tell me.
No, I was just saying, big global cues.
Now, like since the card. Hello.
Yes, Mr. Sunil, please go on.
Yeah. See, now it is more of the regulators and the governments who have to come in support of the market and try to lower on with the volatility that has taken place. Once that happens, I think the larger investor base which everybody is talking about, they'll be able to come back to return to this market.
All right, but we did hear, the finance minister yesterday. We heard the RBI governor also, who did come out and try to allay the fears and, all of those concerns that are being raised by the investors. Do you think that was, more needs to be done? Because weak global cues, the plummeting oil prices, and especially, that the Chinese economy, that is something that has been struggling, has really made everybody anxious at the markets.
As you rightly said, they had come down yesterday, but only talking is not going to help or smoothen down the volatility of this market. Some action will be required, maybe by way of some strong measures or some economic policy announcements, maybe on the MAT issue. Something has to be done so that the investors' confidence, which is getting eroded or lost out, is restored back.
But do you think
without
India
which it will become very difficult for our.
Yes.
Yeah, tell me. Yeah, because without which Indian markets are not likely to get a recovery at the earliest.
Right. So are you saying that India will not be able to withstand the global volatility that is being experienced across?
Certainly, it will not be able to sustain that. And we have seen that in the past also, during the time of Greece is there, or any other smaller countries which were facing those financial problems. Indian markets have always been overreacting and have been facing the heat of that. In spite of our share or our role to that particular country is very limited, but still we being the hot space for the global investors, we always are on the losing side.
Sir, the effect of the turbulence that is being witnessed in the global markets is being seen on the Indian markets. What would your advice be to the investor at this stage?
My gut feeling is, in case of any further downside, if we look into the indices, I was just discussing that only with some of our investors and clients, where I was telling them, like, in case if 7950, which was the level 2 times the markets have tested, and last Diwali the level was of 7750, which the markets had tested yesterday. So it's like a full 1 year the whole markets have turned, and the other level now that is to be looked into is 7500 on the Nifty, which is again the level of somewhere June, July 2014. So the volatility is going to be there, and in this volatility it's not the time when those indices will come. It can happen in a day or two. So in case of any further carnage happening in the global markets, I won't be surprised to see those levels coming soon. But for the investors' point of view, it's a good time to pick and choose and maybe do a SIP type of investments in quality blue chips, as well as some of the debt-free companies.
Okay, we saw the bloodbath yesterday and, panic spread across. But for an Indian investor, would you advise them to stay away from stocks which have an FII stake in it?
See, FII stake as such will not be a problem, but it is on the company's financials that have to be looked into. In case if they are having some FCCBs, any bonds conversions or repayments coming in, then those companies for the time being should be avoided, because that is where the major carnage or the sell-off is going to be seen over there, because the rupee from 63 has gone to a level of 66.5. So the repayments is going to be a problem to them, and as it is, everybody is talking of NPAs for the banking sector. So the impact of that is going to be seen on those companies' balance sheets also.
All right. So, for our understanding, what has really triggered this? Yes, what has really triggered this panic and this turbulence across the global markets? Is China such a big force in the global economy that it would have such a widespread effect?
Certainly, if China is a big giant, maybe on the manufacturing side it is a giant, and it has an impact on the global markets. Now, since the global economies are on a recession side, not much of a recovery is being seen over there. Any slowdown on the Chinese economy is always going to have an impact on the global economies. So to cool down and improve the exports of the Chinese companies, the government has taken some steps, but the steps of that for improving their productivity, the impact is seen on the global markets, where like India is facing a heat already by the currency getting devalued of Chinese. So the heat is being seen over here. Our exports are not that competitive now. So to make it competitive, our rupee has to get devalued, which is indirectly it has already happened from 62 to 66.5.
Okay.
So China, no doubt China is always having an upper hand, and plus with the financials and the fund flows that it has, so it is also controlling some of the currencies of having investments into the global economies also.
All right.
Which is also having some impact in this carnage.
All right, Mr. Pachisia, thank you so much for joining us and sharing us sharing with us your perspective. So the Sensex and Nifty did recover slightly in the morning from yesterday's lows, but we are experiencing continued volatility and the markets. In fact, both the Sensex and the Nifty still trading in the red. We'll keep a close watch at the markets, but with that, we're taking a short break. Stay tuned. We'll be right back.